I've had buyers spend their full down payment in Florida on vacation 2 weeks before close. I've had people go to furniture shopping, get new cars.
Don't buy anything. Yeah. Don't put anything on credit. Do not buy a car. Like, do nothing. For this 30 to 45 day period, just like watch every dollar.
People don't understand though about this process is guidelines are not black and white. If you have favorable conditions, you can do this. Well, what's a favorable condition? What do you consider a favorable condition? And guess what? Underwriters are human beings. They all look at it differently.
One of the things I've learned is there is no reason any loan should close. Everybody's a human being. Nobody has the perfect loan scenario set up that an underwriter is going to go, yep, everything looks good. Every underwriter, it's their job to go, what's this, what's this, what's this, what's this? All the craziness begins, right, in terms of getting this thing closing.
This is where you start to see clients like, all right, they really start to freak out.
Okay, let's talk about the lending process. And before we get started, I want to give you a little caveat. Some of this material can get a little dry as we get into it or really specific. But this is a great episode to save and reference so that you can speak knowledgeably with your clients. And this is something that causes so much confusion. Another caveat, don't try to become an expert in being a lender. Like, you're not going to become a lender. So don't take this too far to where you're giving advice to your clients on financing. And we'll talk about that in just a minute. But take this information. This is an overview of the process. This is an overview of how this works so you can speak knowledgeably to your clients and build these things out the right way, set their expectations the right way. Okay, so let's get started. The first thing that I like to talk about is how to get a client over to the lender, because there's this very specific way that works, and there's a lot of ways that don't work. Because a lot of people will say, well, here's my lender's info, call him when you're ready. Bad move. They might even say, hey, I'm going to have my lender call you. That's a bad move too. And I'll tell you why, because they don't have the number saved. They don't know, like it's going to go to voicemail. This is what you do. You initiate a 3-way text or email. I prefer text. And I just say, hey, RL, this is, Tim and Ann. They're neighbors of mine. They're looking for a refi. Can you get them set up? Right. And then that way we have some accountability on both parties. I've got accountability from the lender, not that you need it, that, hey, he's going to respond to that text and let me know that he got it. And I'm getting accountability from my clients that they are getting the text. And that way I'm keeping it in my camp, right? And I'm able to sort of make sure that that communication exchange happened.
Yeah. No, I mean, that's our preferred way. I certainly prefer that. And while you say I may not need the accountability, I mean, we're all humans, right? So you want to know that, hey, the lender got it and my client got it. And you're right. If you just give a number to a lender, you're dependent on their follow-up. If you just give a number to your client, you're dependent on them to reach out to the lender. Neither one of those are ideal. This 3-way text is the way I prefer. So what I like to do is just confirm receipt in that 3-way text. That's all I typically do. I ask for a time where we can get together. We set that in the 3-way text, and then I drop the agent out. And we do individual connections from there. And I always ask the agent specifically if I'm not worked with them before, like what do you prefer for updates? Because I've got the full spectrum. Right. Like I got some agents that say, I want to know everything. You got to give me all these updates or I'm going to feel out of the loop. Yeah. I got some agents like you that are like, hey, just tell me when we're clear to close.
Right. So I just want to know that, hey, are they approved? And
and very basic communication. And honestly, I'm happy to do either. Everybody needs a different level of communication. I understand the people who want more because I typically like to be more in the loop as well.
Right.
So 3-way text, bake out when you're going to meet, drop the agent off, and then communicate as appropriate. I like that.
So, and then the next portion, and you probably want to take this one, is just the lender consultation.
Yeah, this one's huge. All right, we talk about buyer consultation on the show all the time. It's equally as important on the lender side. Yeah. Okay. So the first thing I do is I schedule a Zoom or a call, whichever one they prefer. If they're a first-time home buyer, they might want to see my face. I mean, they're giving me a lot of personal information. They're giving me social security numbers, bank accounts, all these different things. So if they want a personal connection, whether it's a coffee shop or a Zoom, happy to do it. And I do it all the time. So and the first question I ask them is, how much do you know about this process? Sometimes people say, first-time home buyer, don't know anything. And sometimes people say, oh, I've done this, 5 times in my life. I know exactly what's going on.
Right.
What they don't realize is we do this more than 5 times every day. So 5 times in your life is actually, not that many times. And there's a lot to this, and things change.
Oh, I will tell you, I have a really simple thing from the real estate side that I send, like a little infographic. And it just is like, hey, the 6 or 7 steps that you're buying a house, 1, 2, 3, 4, 5, 6, right? With a little bullet points underneath each one. It's just like a little infographic. And people are so grateful. They're like, oh, this is so helpful, just for them to see that roadmap laid out. So I think it's interesting because people think they know more than they do.
That's right. And like I said, things change. Like, right, the guidelines change, programs change, things change. And they need to understand, if anything else, how you work. So that's the first thing I do is I explain my process and I let them ask questions. And there's always questions.
Always.
I don't care if someone said, oh, I've done this so many times. I know exactly. You don't need to explain anything to me. I was like, all right, well, just let me tell you how I work then. And this is what I do. And then sure enough, there's always questions.
Right. And, even when you're going to get into loan estimates and all that stuff, which we'll talk about in a minute, but like they're looking at a sheet just with a bunch of numbers on it. They don't know what that means.
Yeah.
And so it's great to touch base and then just refresh them on the process and walk them through. And it also makes everybody comfortable.
And you may know that, hey, I might not need to explain what, escrow means now, but because you've done it several times, but you still need to go through the process. The next question I ask is, have you ever had a bad experience?
Yeah.
And what I'm looking for here is for them to tell me all the ways their last lender screwed up. They're going to say, well, they never told me this and they never told me that.
I'll bet what it was is just communication. It's the most thing.
It's communication. Yeah. And it's like, they didn't explain to me this and I bought points and I didn't want to. And and so now I'm like, all right, I'm taking mental notes or physical notes about, all right, do not do that to this person. Do not do that to this person. I'm making sure to knock all of those out of the park.
Yeah.
And not that I wouldn't try to anyway, but everybody has a different, thing that makes them tick, right? Everybody has a thing that like makes them angry or makes them happy. So I want to make sure that I do all the things that they expect of their lender extremely, extremely well.
Yeah, I bet there's just it's just about comfort level, right? In terms of, there are specific things. And like we just talked about before, like I don't really want to know all the details, but some people want to know every particular because it's like money is very personal. And that's what I say is like the realtors, we're doing kind of the fun part of it, quote unquote, because we're basically like, getting them the house and we're talking about where furniture is going to go and those things. It's like that. But that money part is so personal that people that really like, I don't know, it just hits like a certain vibration or something where people, they take it personally. It's way more important to them. They want to know where every dollar is coming. They want to make sure that they understand. And I think the number one thing is they don't want to be taken advantage of.
Yeah.
And it's a massive purchase. And so their risk factor is up and they're just like trying to figure this out and looking for ways that they might be taken advantage of. And it's like, you've got to communicate with them frequently and calmly to get their comfort level up.
Yeah. And honestly, the more you have these conversations with them, whether on Zoom, these lender consultations, or if you explain things very well, or you make sure to do the small things right that they didn't have a great, experience with last time, it's going to make those conversations easier when they don't get approved. Because now you've built up rapport. They understand that you know what you're doing. You're going to be able to lay them down a little bit easier if they don't get approved for whatever reason. And it happens. Like people sometimes they're just not quite ready to buy. And it's something that's solvable, but not solvable right this minute.
Right.
And so just do the little things right to this point, and it'll make all of those conversations easier.
Absolutely.
Next thing I do is review out-of-pocket costs, because most agents don't. And not, it's really both of our jobs. So it's not like I'm saying, pointing the blame. It's both of our jobs to review these things, but I make sure to review even the ones that are out of my scope. For instance, inspections. So like I say, hey, you're going to have an appraisal, and yes, it comes off of your closing costs at the end, but you got to pay for it up front. You're going to pay for an inspection. You're going to have earnest money that's due. All these things are part of the process before we get to the closing table. So often I hear, oh, my agent never told me that.
Yeah. And you guys, you have to start telling your clients, like, this is going to cost money before we get to the closing table. And this is why that consultation, again, is so important, because, at the very beginning of this, you're going to surprise them. You'll be like, all right, now I need, $5,000 for earnest money. They don't even know how they're going to get that to you. They don't know.
Yeah.
A lot of like people that are buying houses now don't even have checkbooks.
Yeah. So
Right. And so like, how
what's
do
a
I
wire?
get money? Yeah. What's a wire? And then like, how do we get this through? So you explaining those things as a front end, it's like, I appreciate that you do that, but it's like, it's our job to do it too as the agent. So yeah, let's get them from both sides.
The last thing I try to get on this consultation call is, what's your budget? Like in an ideal world, where does the mortgage payment fit? Like, is it $3,000 a month? Is it $4,000? Is it, are we not completely sure? But I'm letting them know, hey, you need to start thinking about that, because once we get to the stage where you're pre-approved, I'm going to give you a purchase price and a rough idea of what monthly payment would look like. And you need to know, does that fit into your monthly budget?
Yeah.
So we need to have that discussion, because there's no sense in me pre-approving you for $700,000 if you don't want to spend $1 over $3,000 a month. Now, we all know buyers don't end where they start,
right.
And often they're going to move their price point as we get towards the end. But it's a good idea to start thinking about your monthly budget and where you want to be, and we can map that to a purchase price as we get a little further.
Yeah, absolutely.
Next thing I do, so now we're moved on from the lender consultation. I send out the application. I have a digital application, super easy to fill out. Takes no more than 15 minutes if you sit down and knock out the questions. They're all personal questions that you should really know the answers to. So again, 15 minutes, easy to fill out. If I let them know, hey, if you have questions, shoot them to me, but usually people can knock that one out on their own.
So tell me this is always interesting to me, that it seems to be a hurdle, that application, filling out that application. So you can be moving, and we might hit a 1 to 2 day, break in that process because they haven't filled out the application yet.
Yeah. I mean, they're giving a lot of personal information. So that's why, that lender consultation is supposed to open the door to feeling a little bit more confident with me, a little bit more confident with the process, a little bit more understanding of why they're actually filling this thing out. And hopefully that makes getting the application done quick, a little bit more efficiently. But you're right. I mean, that's a hurdle, but the bigger hurdle is the next step, which is chasing them for docs.
Well, true. Now, I will say this before we get into that docs part. One of the issues, this is the same thing that you do that I love, that I've seen a lot of lenders not do, is they'll just say, yeah, I just haven't filled out my application. And I'm like, there's no personal touch at all. So I don't know. I mean, I guess I get it where they're like, well, that's a filter for them. It's like, it's just better if they fill that out before I talk to them. But I prefer for you to reach out to them, and you do this in your process, to reach out to them before the application so you connect with them.
That's right. Yeah, it certainly helps.
Yeah.
And not only that, but I offer to fill it out with them. Like I've done that a couple of times, like where we just jump on a Zoom or whatever, and they walk through the application with me sitting there. I've even done the application on their behalf while we're on the phone. So I was like, hey, tell me the answers to these, and we'll put them all in there. But getting the application is a hurdle, and then, like I said, the docs piece. So after they submit, there's a number of documents that we need. Those are like pulling teeth.
Well, yeah. And here's one of the things before we get into those docs and pulling teeth again, I'm taking us back again. If you're a lender and you're listening to this, take that 10 or 15 minutes and do that call, because you're building trust. And it's so important, for us as real estate agents, obviously we're having to build that trust as well. But sometimes as a lender, and I get it, there's a lot of, processing that needs to be done. That can be as a filter, is like, are these people really serious or not? But even making that little 10 to 15 minute connection and giving them an encouraging word, giving them, taking some of the mystery out of it before you get to that, will get them to fill out that application, keep them in your sphere, right? Because by the way, they could shop another lender, and there might be friends that say, hey, do this stuff. As a matter of fact, somebody I referred to you was telling me last night, they said, yeah, somebody was saying, I need to go check out this other lender. And I was like, no, I already have one. And so you want to make that personal touch, build trust, and that's going to keep them in your sphere.
Yeah.
Okay. So anyway, but
you really don't want to go to docs. Are we good to go to docs?
Yeah. I don't want to go to that. Yeah. That's totally, people that are buying houses are my personality type. Like, we don't like documents.
Yeah. But yeah, anyway, chasing him for docs. So after you submit the application, the next thing it's going to ask for is like pay stubs, W-2s, bank statements. And they're like, oh, I got to sit down and go find all this stuff.
Well, I'm digging through like emails and I come to reach out to my CPA. I'm like, hey, where did I put this? CPA thinks I'm an idiot. Like
Yeah.
he's like, dude, just freaking put it in your files. I'm
Yeah.
like, "Okay."
And so that part, and honestly, I never pre-approve anybody without seeing those things.
Yeah.
Because somebody's going to tell you, I make $100,000 a year, and they make like 30. And you're like, where did you come up with this number?
It's that AGI for self-employed. It's
Yeah,
like we're trying
that
to write
one.
off everything.
That's a big one. But honestly, sometimes they're like, oh, well, I make, $50 an hour, and you just multiply that by 80 and times 26 divided by 12. And they're like, that's my income. Well, half the time they work 20 hours a week or something. So, I never do it without docs, and getting those docs is hard, and agents don't understand why you're still waiting. They filled out the application. Why can't you just pre-approve them? Because I need to see the paper.
Yeah.
I need to see the proof that what they told me in the application is actual. And it's going to save everybody time. Look, if I pre-approve you based on what you just told me, and we go under contract and we submit the file and we get rejected, nobody wants that.
Yeah.
So do the work on the front end.
I mean, I think, after like hearing you, I think I might incorporate that into my process and just tell my clients to be like, hey, there's a couple of things that are little hurdles that you have to jump through. One of them is the application. Don't get hung up on that. Just fill it out. Only takes 15 minutes, but that's going to be kind of the first step. The next hurdle is documents. And so go ahead and start gathering your last 2 years of tax returns, because that can sometimes, you might have to dig, but just be ready, because the faster we get those things done, the better the thing's going to go. And that's how you become, you're going to be an informed buyer.
Yeah.
So I might incorporate that in my process.
Yeah. I mean, it's good. If nothing else, they've now heard it from two people, right?
Yeah, that's
so
right.
now they know
That's
it's
right.
important.
Yeah.
And some people actually do make exactly what they said, and that's great. But just so many people don't understand also how we calculate income.
Mm-hmm.
It can be very different than what they anticipate. So
Yeah, very true.
So the next piece is like, all right, we've got an application, we've got docs, we're going to pre-approve them. And, some people want to know, hey, what's my max purchase price?
Yeah.
Some people are just like curious, like, hey, just tell me the max purchase price that I can buy a home.
Yeah.
And we'll work those up. But more often we try to work back towards that budget thing where it's like, hey, let's talk about this in a monthly payment perspective, get an idea of what you're comfortable with. And, then we'll go from there. But again, some people want to know max purchase.
Well, yeah, of course. Well, they always just like, how much can I get?
Yeah.
And typically people, I would say the majority of people are shopping at their max approval amount.
Yeah. I would say
Most
that's
people
true.
don't say, hey, I'm qualified for 500. I'm buying a $350,000 house.
Yeah.
They're typically shopping in that price range.
The piece that agents don't typically understand is like, why can't you give me an exact number? Well, because I don't know the house yet, so I don't know property taxes, which is a component of the monthly payment.
Sure.
I don't know home insurance yet. And honestly, home insurance used to not be that big of a deal, but insurance has skyrocketed in the last couple of years.
Yeah.
And specifically for people with iffy credit or have had claims, none of which you would know through the application. So I had one where like my guesstimate from my insurance tool was like $1,400 a month, and it came back at like 29 because they had filed like 4 claims on home insurance in the last 2 years. So these are things that you wouldn't know, and that drastically changes the monthly payment.
Yeah.
And if they're on the bubble of qualifying, and now the mortgage payment is $200 higher because the insurance came back high, you're out. And so like it's the exact number thing is difficult. We're gonna get pretty close, but it's not exact.
Yeah, totally.
So yeah, anyway.
Can I ask you a real quick question and not interrupt your flow here, but there's a couple of different terms. Like one of them is pre-approval and one of them is pre-qualification. And I've heard a couple of different explanations on what the difference is, if there's a difference. So what's the difference between pre-approval and pre-qualification?
Pre-qualification is like a lighter version. You're not going through all the exercise.
Okay.
Yeah.
Gotcha. So pre-qual is just like
we're pre-approval. Like we've run credit, we've verified income, we've looked at bank statements, we've done it all.
I think I remember at one point in real estate that we just used to get pre-qual letters. And then they were like, well, it's a pre-qualification. It's not a pre-approval. But we would run with the pre-qual, but you don't really do them, which makes sense.
I don't do them. I just do pre-approvals.
That makes sense.
Yeah. I mean, like why would you even want to hang in the balance? Like
you wouldn't.
Let's do the full thing and be done with it.
Yeah, because that's right. Because there were a couple of lenders that I work with that would pre-qual people, and then they were like, "Well," and then we would get them under contract. They would be like, "Well, their tax returns weren't what they told me."
Yeah,
And
exactly.
I was
So I
like,
mean,
"No,
those are the
let's get
kinds
them
of
through
things
the
you run into if you don't do the full pre-approval.
right."
I don't. This doesn't come up too much anymore because most people just don't do those anymore.
But yeah, that's weird that I remember that. Yeah, we don't use pre-qualification anymore. We use pre-approval, but we did at one time.
And now, man, pay constructs are so unique. Like you'll get people that have like 6 different pay categories or 10 different pay categories and get them from 2 different locations. And one, because now a lot of families have, 2 working people in the home, like one's self-employed, one's W-2, and like coming up with income is not as like streamlined as it once was, where everybody had like kind of a typical pay construct.
Yeah. This pre-approval place though is also where I see like clients that want to start shopping rates. That's where they sort of like go, okay, well, what kind of rate can you give me? And I find that is an uninformed question. Basically, it's like there are all of these like different dials that you can turn to kind of adjust the rate. I don't think you're going to see big swings. And anytime someone's like, oh, well, this person quoted me this, I'm like, well, there's probably some prepaid interest. You may be buying a point. So I just find that whole shopping thing is unnecessary or doesn't really matter. I mean, it's like, hey, can we get to this rate would be the question I would think.
Yeah.
I would just rather work with a lender that I trust and be like, hey, they got quoted this other rate, but there's probably some.
This is the point where you start thinking about it, primarily because you've now run a hard credit pool. And so you can kind of run a few more without the worry of it dinging your credit anymore.
Right.
And people want to shop at this point, but honestly, the way rates have been fluctuating lately, it can be meaningless by the time you get under contract.
Right.
But you're right. More often than not, everybody's got access to roughly the same rates. Now, the real question at this point, I think, is are you working with a broker or bank? Because a broker works on behalf of the client, and the bank works for the bank.
Right.
So if you're Brandon and you're a retail lender and you work for Bank of America, they get what they get and they can't throw a fit. You get what Bank of America has that day.
Right.
You work with me, well, I work with you.
Yeah.
And so I go out and I shop your file to a number of lenders that I think are appropriate based on, kind of the justification of your file, and I just try to get you the best deal based on what's out there. And sometimes I'll play lenders against each other. I'll be like, hey, XYZ lenders give me this deal. What are you going to give me? And so I'm like really out there working for you. So that's really the difference at this stage: is are you working working with a broker or working with a retail lender?
Yeah, I think it's interesting to me, because when you're working with the bank, there's definitely a different feel in terms of how that works out. And with the bank, it feels like and I don't want this to be like a judgment on anybody, but it feels like that person isn't as invested in pulling the deal together as someone who's an originator. They're like working these different deals and trying to pull this deal together, and they'll take after hours calls and stuff like that. If it's somebody that's working for the bank, they're not, right? They're kind of more 8 to 5.
That's right.
Yeah.
I mean, they're an employee.
Right. And so it's like, I typically like to work with someone who's more entrepreneurial, who's going to be working to pull the deal together, is going to be focused on customer service versus like, hey, take it or leave it.
Yeah.
And I'm not saying that all banks are that way, but that's just been my general experience with bank versus loan origination.
Yeah.
Loan originator.
Yeah.
Yeah. Anyway.
But, in this stage too, you're starting to get the full picture of like what loan type they would need.
Yeah.
Like, do we need to go FHA? Are they VA? Are they, conventional loan? Do we need to go to like a non-qualified mortgage product that doesn't fit in those pretty boxes? You're starting to get the full picture here. And that is where you can start to give them an idea on the rate. But, it's until we get under contract and we've got everything nailed down, you're not giving them an exact rate yet.
Right.
This is also the stage where you're communicating with the agent, right? Like, this is what it looks like here. This is what we're thinking on loan type. This is how much we want to be looking for from a purchase price perspective. All of that. So you're giving the agent that full picture. Like, here's where we're at. I don't give letters at this stage. We get to that later.
Okay.
And I'll talk about why. But that you're at least giving the agent an update. Like, hey, I've got everything I need. I'm just kind of building the full picture.
Right.
And then the last thing is talk to them about their spending and credit. I've had buyers spend their full down payment in Florida on vacation 2 weeks before close. I've had people go to furniture shopping, get new cars, even after you tell them not to. I try to ram this one down their throat.
Don't buy anything.
Yeah.
Don't put anything on credit. Do not buy a car. Do nothing for this 30 to 45 day period. Just like watch every dollar.
Don't make any large cash deposits like that we can't source. Like all kinds of things I try to talk about in this stage, just so they keep a clean file for the duration of the process.
I've seen deals bust like that. It's devastating.
Yeah. I try to stay in touch with both the client and the agent throughout, because now we're into shopping, right? So I try to stay in touch with the client and the agent throughout the shopping process. I do a weekly touch point, or if they're like actively submitting offers, I'm probably touching base a little bit more frequently than that. And the agent honestly is probably keeping me in the loop too. Like, hey, what would it look like if we did an offer on 123 Main Street?
Yeah, I find at this stage, like there's a lot of back and forth communication going on, and I'm calling and be like, hey, how would closing costs be on this? What's the payment going to be? Here's the, so we're talking a lot typically at that offer stage. So yeah, I find the communication is usually pretty easy, but that's another thing is, I do want a lender and, I want to be respectful of people's time, but I do want a lender that I can text and be like, hey, we're about to put an offer in on this. When you get a free 3 minutes, give me a call. Like on a Saturday or a Sunday.
Yeah.
And like, again, I want to respect people's time, but I need that. Like, I'm not getting that from all lenders. And I'm especially, again, no offense, I'm not getting that from the bank.
No, certainly not.
So I just like to have those, because this process is so time sensitive when you get to the offer stage. It's kind of like being a doctor and being on call. Like, it's like, things need to be moved on quickly. And so I just like to have that, someone that I can reach out to and be like, hey, problem solve with me here.
Yeah. And sometimes you might be asking for closing costs, and you might want to know like roughly how much to ask for, or how much you can ask for. Because
I call you every time when I was like, hey, how much closing costs should I put on this contract for this price?
Yeah. And sometimes too, like, if you put less than 10% down on a conventional, you can't ask for more than 3%. So, you're wasting your time if you ask for more.
Right.
And agents don't know that, nor should they.
Right.
Like, talk to the lender. So now we're getting into, all right, you've identified maybe a property that you want to make an offer on. That's when I tailor my pre-approval letter to the offer. And, you don't have to. I mean, I think on one hand, people think, hey, I want to just match the pre-approval to the offer price. And that's the way I like to do it. Because why would I send you a $500,000 pre-approval letter for offering on a $400,000 house?
You wouldn't.
It's just, it's giving away more information than you have to. Maybe they use it, maybe they don't, but why give away more information than you have to?
Yeah, no need.
So I actually have an app that I use for my application itself, but it also allows the agent who's a partner to come in and generate their own pre-approval letter anytime they want. And it just has to be within the parameters.
Yeah, that's a huge deal. It's like that way I could just like, hey, I can go in as long as, so you're giving me the bracket. And if I type in a certain price, then it'll generate that pre-approval.
Yeah, and if you're outside the bounds for whatever reason, like if the purchase price is too high or concessions are wrong or something like that, it won't let you. But I like to do that because, look, if I'm at a kid's soccer game or if I'm in a movie with my family or something I can't answer and you need to get something out, you have the ability to do that. Yeah. Now, some agents, they don't want to deal with it, and that's fine. Like it's really quick for me to hop on a laptop and do a pre-approval letter that's already kind of really ready to go. It's just generating it. And I do it all the time. I keep a laptop with me wherever I am. So it's not a problem, but I like to give people the opportunity because some people like to take control and just knock it out.
Yeah. Okay. So now we've got the offer accepted. All right. And so we've submitted it. It got accepted. Now this is where like all the craziness begins, right? In terms of getting this thing to closing.
This is where you start to see clients like, all right, they really start to freak out. And so
yeah, it's true. Cause it's like, oh man, I'm really spending this money and I'm under contract to spend this money.
Yeah. I'm under contract to spend this money. Yeah. So now we're like what we call building the credit package, right? So we're getting like all the documents together. We're making sure the loan application, every box is ticked, everything's done appropriately. I'm shopping with all my lenders for the best rates. I'm starting to see, all right, where am I going to place this thing? Because once you're under contract, you're not waiting any longer. You're not just going to wait for rates to do this or do that. I'm starting to say, all right, what's the best deal I can get today? And so like I'm looking, and I've got 120 lenders, so sometimes that's not like super quick. I usually know probably one of maybe 5 banks I'm going to send this to, but until the day comes, I don't know. So
the lock is something that confuses a lot of people in terms of like what locking a rate and when to wait and when to take a move on it. So like shed some light on that.
Yeah. So a lot of agents believe that the day you go under contract is the day you lock, and that's not necessarily true. There are a lot of now. The other thing I'll say is that it looks like
what I was going to say, just in terms of like locking and interest rates. So interest rates are fluctuating all the time. So I just wanted to kind of clarify.
Yeah, you're right.
Interest rates are fluctuating all the time. So you might like 6.25, 6.27, 7.1 or whatever. And so all of that's fluctuating. And so at some point you've got to make the decision and lock a rate, right? So
yeah. So yes. So they are always fluctuating, and you basically take what you get if it's moving up and down. But if you lock it, that entire table from the one with all the points buy down to the one with all the credits is locked in. So you can move, once you've locked it in, you can move anywhere in that table at that given snapshot. So you could, that whole thing's locked in. So the pro is that if the rates go up, you're protected. The con is if the rates go down, you're really not. That's what you're locked in at. Now, there are lenders that allow what they call like a float down. Usually it's a small fee, and you can kind of take an updated table if it went down the day after. Some lenders might say, hey, if it goes down this amount within 48 hours, we'll just let you have it. There's a lot of different policies here, but in general, once you lock it in, it's either that, and it is that, and then if they go up, you're protected.
Right. I mean, there have been people, it's like, I don't know, it's just been my experience that with lenders, they typically know it's like, hey, just go ahead and lock this one, right? And you're not going to see a ton of fluctuation. But there have been scenarios where we've seen big swings like post-COVID. And I remember you were like telling people, like, if you don't lock this today, this bad thing is going to happen. So once you get in kind of volatile markets in terms of interest rates, it's like, listen to your lender.
Yeah, I have a crazy story about that one. So I was in Costa Rica, and I was working with a client. This thing never even closed, and I was so mad. So I'm in Costa Rica, and they have what's called jungle internet, meaning crap doesn't work, is what it really means. And so I'm checking rates because he's super rate sensitive, and rightfully so. He's buying a house, and I see a rate that I haven't seen in months and will never see again, and I know it.
Yeah.
And like you said, we watch rates all the time, so we kind of know when these things happen. And so I'm calling him. I'm like, we need to lock now. And he's like, I got to talk to my wife. I'm like, no, to talk to her, but we need to lock now. And I drive. I'm on the west coast of Costa Rica, and internet's crap, and they just had a big storm. So I'm like driving into town, trying to find this like cafe that has internet. Find one.
An internet cafe.
He calls me back, and he's like, yeah, we're not going to lock. I'm like, and so, all right, I'm packing up. I'm going back to my place on the west coast of Costa Rica. I get there, and he calls me back. Yeah, we want to lock. So I drive back to the cafe. I lock it, and then the thing never even closed. But yeah, so sometimes there are just those, you need to lock right now.
Yeah.
But anyway, in general, they do fluctuate. Some people think you need to lock it the very first day. That's not exactly true. If you happen to know things that are going on in the marketplace, you might want to wait. You might not. So it's all work with the lender when you get to that realm. Like, don't just make any assumptions about rate locks.
Yep, totally.
So we build the package. We've got all the docs put together. I've shopped for the rate. We've had the lock discussion. I'm starting to get like taxes and insurance now that are a little bit more accurate. So like if they have an insurance carrier, if I've got one that I'm going to refer them out to, I can get a quote, an actual quote based on the address. I can get the property taxes based on the address. So we're starting to get a real clear picture of what monthly payment looks like. It could still fluctuate a little based on, finalizing those things, but we're getting within dollars now. And that's honestly where it starts to make people a little nervous.
Yeah, absolutely.
Is they're like, before this was all like ranges, but now we're like,
now we're dialed in.
This is my payment.
Yeah. Yeah, that can freak people out because where they start typically in their expectation for payment, just at the beginning of the buying process, and where they end up, it's going to make them squirm a little bit. Right? They're like, oh, that's a little more than I wanted, or it's a little more than they're paying now, but they'll be fine.
The next thing I'm about to say is what in my opinion, separates a really good lender from a bad one. Is once I've got this thing built, and I've got all the fees typed in, I've got the whole credit package ready to submit, I've got to disclose the loan, okay? And what that means is they're going to get all the documents, including the loan estimate of what monthly payment's going to look like, what the rate is, what closing costs are, and they're going to be looking at a massive sheet of numbers and not have any idea what they're looking at. I record a Loom video or something like that. I use Ecamm Live, but whatever. I record a Loom video that walks them through the loan estimate. It basically, I go line by line and say, this is what this means. And when I send that video over to them, I tell them to call me if they want to walk through it live. Yeah. You have to do this. Because people...
They have no idea what they're looking at.
You will never get doc signed.
It just has numbers and lines on it. And I had this experience the other day, and it really ticked me off because a lender that I was using, not you, because it was a new home construction deal, but they were like, just sent over like the loan estimate for signature with no explanation.
Yeah.
And then what do you think happens?
They're never going to sign that.
They're calling, hey, can we talk about a few things? This doesn't make sense to us because a loan estimate, I mean, it's like you might as well have sent it over in like Sanskrit. You know, it's like people just don't understand. And there's part here and then there's variable costs that could change. And here's what your P&I is. And here's what your taxes and insurance is. The insurance could change, HOA fee, like all of that stuff is on there and it's just confusing.
And they're big numbers.
It's like, just as a lender, if you're listening to this, take some time, just record a video and say, hey guys, I sent over the loan estimate. I just want to do a quick breakdown for you so you have some understanding. Give me a call if you have any questions.
Yeah. And send it to, if there's more than one borrower, send it to both.
Right.
Don't let one explain it to the other. Send it to both. And honestly, you will get so much further in these deals if you do this, because when you get to this stage, if you're not getting those, let's say you have a pretty tight closing window. If you're not getting those disclosures signed, you can't submit it. So it's not going to move forward until you do. So take the extra time, do the review, help them understand what they're looking at. And they also don't make any crazy assumptions if you haven't explained it. So sometimes you'll see that, like, let's say that you're a broker and there's two different ways to get compensated as a broker. It can be built into the rate, which means a little bit higher rate, or it can be something that the borrower pays as a line item. If they see your compensation and they haven't been explained what that is, you don't think they're going to be like frustrated and felt like duped?
Yeah, so that's the deal. You're basically, again, like people are like, their defenses are up and they're scared that someone's going to take advantage of them. And if you don't explain it to them on the front end, they're going to think that of you. So now you're on defense when they call you. That's right. They're like, hey, what is that? You didn't tell me about that.
That's right.
So get ahead of it.
Yeah. All right. So we get signatures on those docs because you've done a great job of explaining it.
Exactly.
We move on to
that's my favorite part, underwriting.
Yeah, we submit to underwriting. This is no one's favorite part. I don't envy the job of underwriters because it's their job to prove that this loan doesn't work, and it's your job to prove that it does. The underwriters that are my favorite, though, are the ones that are working with you to find solutions to problems. Yeah. And there are great underwriters out there that's what they do, is they help you find solutions. So
here's what I want to, like, one of the things I've learned is there is no reason any loan should close. Right? Because everybody's a human being. Nobody has the perfect loan scenario set up that an underwriter is going to go, yep, everything looks good. Every underwriter, it's their job to go, what's this, what's this, what's this, what's this? Yeah. And I need this. And where did that money come from? And because they're reviewing bank statements. I mean, so it's like the more I learn about this, I'm like, God, it's a freaking miracle that any loans get.
Yeah, it really is. I mean, there's just so many things. Like, somebody got a check from their mom for their birthday, and they're like, "That's over the threshold. What is that?" And you're like, "Oh, gosh."
I know.
But yeah, I mean, there's been some crazy ones. I had one where one of my clients had been saving her birthday money in a safe for like 10 years.
What?
That's what she said. And so she went to make a deposit. It was like 30 grand. I'm like, what kind of birthday money are you getting?
I've just been saving my birthday money.
It's like, and I sold a horse. I'm like, nobody's going to buy this. Like,
I sold a horse.
But sure enough, she really had paperwork on
that
the
is
horse.
so wait, hang on. Let me just make sure. She sold a horse, kept the money in cash or something?
Yeah.
And then took it out of the safe and then put it in and then she had to show the receipt for the horse purchase.
Yeah. That happened.
Was that Tennessee?
Oh yeah.
Of course it was. Yeah.
So
I'm sorry.
So
yeah, that's for my horse.
Yeah. I had one guy. Oh, you think that's crazy? I had one guy who bought gold bars on eBay and then sold them to a jewelry store or something. And he had receipts on that one too.
Cash for gold.
Yeah.
I love it. All right.
So
it's a real Ron Swanson move.
Yeah.
Got lots of gold buried in my backyard. Undisclosed location.
Yeah. So yeah, anyway, you get this whole credit package built, they sign the docs, you submit it to what's called an initial underwrite. It's the very first underwrite that happens. A bunch of different underwriters look at it usually. And you usually get that initial underwrite done in like 1 to 3 days. So that's kind of like the first time where you're kind of in a holding pattern and the clients feel it, right? They're like, have you heard back? Have you heard back? Have you heard back? Like, not yet. But usually everything comes, because if you've done a really great job at pre-approving them, you've done your thorough checks and everything, usually that just comes back as you would expect, as approved with conditions, and maybe there are a handful of conditions that you have that'll get you to the closing table. What people don't understand though about this process is there are files that are kind of iffy. Like, guidelines are not black and white.
Yeah.
There are books, they're called selling guides from all the investors that say like, this is what we will approve for a loan, but they're not black and white. They're like, if you have favorable conditions, you can do this. Well, what's a favorable condition? Like, what do you consider a favorable condition? And guess what? Underwriters are human beings. They all look at it differently.
Right.
What I do in this stage is when I submit it, I literally write up a document that explains the loan, the story. I tell the story.
Okay.
I say, here's the story of the loan. Here's the way I calculated income. Here's the way I see this file, and I put it all in a document with the package.
Interesting.
So now I'm talking the underwriter into what I'm thinking.
So we think it's facts and figures, but there's actually a narrative.
There is a narrative
in this lending process. So they need to know the story.
They need to know.
That's fascinating to me.
So for instance, if you take a certain amount of time off work, like let's say you have a baby, and then you go back into the workforce, well, there are guidelines around that. Well, if they took time off work to raise a baby, explain that. Like, because all they're going to see is gap of employment. They're going to have no idea why.
Yeah.
Did she get laid off? We don't know.
You can't run it on facts and figures alone. You have to tell the story.
So I tell the story. I say, this is how I'm calculating income. She took time off for this, and now she's back, and this is, she's in the same industry, all these different things to tell a story. And so, and now also they're reading this and they're like, oh, okay, I see what RL's doing here. I see why the file's like this. If they don't, then their imagination's telling them what the file should say.
I think that's just fascinating, because I think we are thinking like, hey, credit score, bank statements, whatever, facts and figures, but those facts and figures aren't going to get approved without a story.
There are so many guidelines that are not facts and figures. They are favorable conditions or, under these circumstances, and they don't list the circumstances. It's like, you have to tell a story.
Speaking of stories, do you think like for the horse sale, do you think they like showed up with like a briefcase of cash?
I think so. It's got to be a briefcase.
Yeah, you'd have
Actually, it's a horse, right? So it's like a duffel bag or something.
It's like a duffel bag that's mounted on. Okay.
It's like a saddlebag. It's a saddlebag.
It's a saddlebag full of course. That's right. You wouldn't do a briefcase. You would do a saddlebag full of cash.
Yeah.
That makes sense. Okay.
So, and the one thing I say, agents, we tell you guys this when you're submitting offers as a buyer's agent, call the other agent. I do the same thing with underwriters. I call them. I say, hey, looks like we're working together on this file. Nice to meet you. My name's RL. I just wanted to kind of give you a quick rundown on this one. XYZ. And you're building rapport with the underwriter because guess what? You're on the same team.
Yeah, that's right.
They have a salary. They get paid for doing their work.
Yeah.
You're getting paid by the file. You both want this thing to close. You're going to say, hey, look, if you see anything, if you want to help me come up with some different solutions to solve the problems, I'm happy to work with you. Like you're building rapport, just like you built rapport with the clients, just like you build rapport with other agents, you're building rapport with underwriters.
I'll bet they appreciate though that you've attempted to solve the problem, and they might make a change here or there just because that's what people do. I always say it's like if you ever ask someone for advice, they're never going to like not give it to you. So same thing. It's like if you're going to, but I bet you they appreciate it's like, hey, okay, these are like 80% of these solutions are good. Maybe this one we could do this differently.
Yeah, the way I always ask that question is, the reason why is there's multiple ways to solve every problem. But I usually say like, what are the acceptable responses to this condition? Like, what are all of the acceptable ways to solve this condition? Because it might be like, you need this much cash to close. Well, can I get it from a bank statement? Can I get it from a sale of a previous home? Can it come straight from the title company to the new title company? What are all the acceptable ways that I can solve this? And then I pick the path of least resistance, right? So like I say, all right, well, if I can solve it. And if you don't say that, then they're just going to say, this is the condition.
Yeah.
But I want you to tell me like what's going to satisfy it in your mind.
Right.
Because not every underwriter's the same.
Yeah. And they're human beings, just like appraisers, just like inspectors, like everybody's a human here.
Yeah.
So
also some banks do what we call CD at initial. If you guys have ever run into a situation where a lender didn't get the CD out, the closing disclosure out within 3 days before closing, and you guys couldn't close, that's because they work with a bank that CDs at the end. Yeah. I don't. I CD what's called CD at initial. So the closing disclosure goes out with the approval with conditions, and then I don't have to worry about any sort of timelines towards the end that are going to delay closing. I want it out. And so I do CD at initial with most of the banks that I work with. But anyway, they'll come back with a list of conditions, right? So we've now got approval of conditions. There'll be 5, 6, 7, hopefully not more than 7 conditions that say, hey, like I need to see proof of these things before we're going to get to the closing table. And usually they're more bank statements, explaining large deposits, verifying their income in some form or fashion, whether it's you had to trend it over 2 years, so you need pay statements from earlier or something along those lines. But usually those are the kind of the typical ones that you might see.
Yeah, and you need so it's like explanations. And I always try to tell my clients like, you're going to get all these conditions from the lender, and that doesn't mean you're not getting the house.
Yeah,
they're just wanting to take. But a lot of people will freak out about that. They'll be like, "Oh,
I already sent you all this stuff at the beginning. Like,
like what's wrong?" And it's like nothing. This is just a process.
Yeah. And then this is also the time too, where like if the inspection was already completed by the real estate agent and the client, if they've already had the inspector go out and gotten the results back and determined that they want to move forward, this is when I would order the appraisal. Yeah. It used to be where like they were so backed up that I would order it right away no matter what. But because I got to pay money out of pocket and they can't get it back once it's conducted, I wait until the inspection is good.
Yeah, and that's probably a market specific thing too, because a lot of times, like, well, when we were in COVID, I mean, appraisers were so backed up.
Yeah, you got to order it.
They was going to delay
hope and pray that it didn't.
Yeah. Okay, gotcha.
So, so you send the list of conditions to the clients, and you send them a very thorough email, and then call them right after with everything that you need and how to provide it. Because if they need a bank statement, if the underwriter needs a bank statement, they can't just take a snapshot of 4 transactions in their bank statement from last month. Right. It has to be a very specific format. And so people get very frustrated because you're like, I can't take it that way. I can't take it that way. I can't take it that way. I've got to have it like this. And so I have actually recorded a video too that shows people the exact way that a bank statement needs to look to submit it. Sounds very dumb, but a lot of fraud happens.
Yeah, it's true.
People fake bank statements, people fake pay stubs, There's a reason why it has to be in a certain format.
Oh yeah, that's been one of the more interesting things is like how far people can get, like committing fraud. In this process.
Yeah.
So at some point they're going to get caught. Like I've never seen anything go through, but the other thing I'm like, man, do they really think that this was going to go through?
Yeah, I think you should talk to some people who sell cars.
Oh yeah,
there are a lot of cars that drive away that they realize it was fraud.
No way.
A lot. Yeah. Anyway,
that's crazy. All right.
So then you start to get conditions back from your clients. Hopefully there's not a lot of pulling teeth to get them. But as you do that, you're submitting them back to underwriters. Underwriters are signing off on these things, and you're getting closer and closer to your clear to close. A good lender is probably going to work these things pretty quickly. And usually if they've done their due diligence up front, there's very few conditions. So they can get kind of through those conditions pretty quickly. And, hopefully you're clear to close well before you need to be. Yeah. And that's usually how the files go. There's obviously some tricky ones sometimes, but that's usually how they go.
I love hearing the clear to close. Then you're like, right? Like we're getting there.
Yeah. And agents don't understand this, but there are still things that can happen.
Sure.
So lenders have to audit 10% of the previous month's number of loans that month. Mm-hmm. So if you ever hear a lender say like this loan had to go through an audit, QC audit, like everything's paused for now, that's real. Like they have to audit a certain number of their files. It's part of their process. They're regulated to do so. There's nothing you can do about it. Mm-hmm. It could happen one day before clear and there's still nothing you can do about it. They try not to pick those files, but sometimes their hands are tied.
Yeah.
And so, clear to close is what you want to hear. And so you've got that, and now you're starting to like what we call balance with the title company. So the title company has a bunch of fees, like they've gone out and found HOA transfer fees. They found any sort of like community fees that you might have to pay or anything like that you didn't have access to. Mm-hmm. You guys are sharing those back and forth to build the final, like these are all the fees. This is what you're going to pay in closing costs. This is the stage 2 where people start to get a little frustrated if you haven't given them an explanation up front. Like, hey, these fees aren't final until the end. Like it could change. And hopefully it's small, but like I've seen HOA transfer fees in the thousands.
Yeah.
So, you never know. So don't go spend your money in Florida. Like,
that one's still fresh, huh?
Yeah. So anyway, balance with the title company. You guys get a finalized package. You're sharing final docs with the title company, and everybody's ready to sign and be happy. Typically I do what's called a hybrid close, meaning they can sign a number of forms digitally, and so the signing day is very quick. It's just like the only ones that you need a wet signature on. Right. But and
then we're at closing day. And one thing I do, we've mentioned this before, but closing days, don't make them Friday afternoon. Don't make them. I stay away from Fridays at all, just because I don't know where we got in our head. And I guess maybe I understand that like somebody's like doesn't want to take too much time off of work or something. But Fridays are the worst day to close.
Yeah, I mean, what I just described, that balancing process. Do you think that's hard on a Wednesday? It's really hard on a Friday.
Oh man, and then you've got wires to go back and forth. You've got movers. They're going from one job to the next. If anything gets hung up, a wire doesn't come through, it's like Armageddon.
Yeah.
And so it's just better to do Wednesday, Thursday close. That way it's gonna be a lot more peaceful process than trying to do it on a Friday.
That's it.
Okay. Well, guys, thanks for sticking with us. I mean, it's a little bit of a longer episode, and again, the information is kind of detailed and specific. But like I said, this is great information for you to speak knowledgeably. There will be chapters broken down in this, so you can kind of go back to a specific place and convey that information to your clients. So save this episode. This will be a great tool and resource for you. I thank you guys. Make sure to like and subscribe, and we'll see you next week. Adios.